Welcome, friends. You're listening to the Swears and Does Hair podcast for bridal hairstylists and makeup artists looking to take their business to new levels. Here we tackle topics such as mindset, finances, balancing business with motherhood, and healthy strategies to keep your body and mind supporting your business rather than holding it back. I'm your host, Sue Minsky, business coach for bridal artists and creator of the Next Level Bridal Business Program. Thanks for joining me. I can't wait to dig into today's topic, so let's get started. Hey everyone, welcome back to the Swears and Does Hair podcast. I'm your host, Sue Minsky. Today's episode is going to be talking about money. So I coach a lot of hairstylists and makeup artists when it comes to money. I have several different mini trainings surrounding this topic, and it's one of the first things that we dive into whenever I do a one-on-one coaching call. It's kind of part of your homework to prep, to get your information, not just your booking rates, and it's not about how many weddings you are booking necessarily. It is about your profitability. Are you making enough money per wedding? So I have a couple of different resources that if you're interested after listening to today's episode, you might want to go ahead and check out. I'm going to leave some links below this YouTube video if you're watching on YouTube, or in the show notes if you're listening on Apple Podcasts or on Spotify and you're getting this in podcast form, okay? So the two different resources that I have is a masterclass called Money Management and Wealth Planning inside of my monthly membership called Masterclass Magic. It's $27 a month. There's a new masterclass that ranges somewhere between 35 to 65 minutes each month. And the topic that I did for the month of August was called Money Management and Wealth Planning. And so it breaks down a broad overview of how I recommend managing the income and outflow of money in your bridal business to make sure that you can sustain yourself long term, and then a little bit about how to take your profits and how to take the year-end bonuses that I teach you how to get and put that into making that money work for you, investing it, helping that money make you more money, okay? So there's that option. And then I also have a full mini course. So it's about 6 to 8 videos. I don't remember off the top of my head right now, but each one breaks down a lot more in depth. And those are between 35 to 60 minutes each. And it is a specific part of the equation about your profitability, about the different bank accounts that I recommend, how to set up those bank accounts, the types of money that should be going into those accounts, percentages, et cetera, et cetera. Both of those options also come with a little online calculator that you can use to figure out, can you pay yourself a year-end bonus? And that is what I kind of want to bring up the concept of for you in today's episode, is not just about managing your money, but are you able to manage your money in a way that you can actually give yourself a year-end bonus? So, you know how in the corporate world, you go to work every day, you do your job really well, and at the end of the year, you have some type of performance review, and you can get a year-end bonus based on how good you did throughout the year, how productive you were, how much money you made for the business. Most corporate positions have these types of perks, okay? Just because we are self-employed and just because we are running our own businesses doesn't mean that we can't have that option as well. And so it's really actually much more simple than you think to give yourself a year-end bonus, but it takes some strategic planning and it takes some self-control throughout the year. And that is essentially the underlying point of my mini course and my masterclass, is to teach you these in-depth strategies on how to do that and how to set yourself up for that. But I wanted to give you some tips in today's podcast episode about how you can think about setting yourself up for that as well. So tip number one, is you're always going to be in feast or famine mode, and you're never going to be able to scale if you can't manage your cash flow. So it's really important, the most important step of being able to have this money to give yourself a year-end bonus, or to pay yourself paid vacation time, or to cover yourself if you get sick and you have to replace yourself on a job. There's so many different reasons why you would want to be able to have this extra cash just sitting there in your business. You're never going to be able to get to that if you're living in feast or famine mode. If you can't manage your income and your output of the money that you have in your business. So you really need to be able to understand how that money is flowing, or else you're never going to be able to get out of feast or famine. You're just going to have money coming in when it's coming in, and you're using it up. And then when money's not coming in, you're freaking out. Okay, that's what that whole feast or famine thing, it wreaks havoc on your health. It wreaks havoc on your mental health. It can wreak havoc on your relationships and the long-term sustainability of your business. If you're in feast or famine mode, you are never going to be able to scale back from the amount of weddings that you do. It's not about how many times you raise your prices. If you can't manage your cash flow, it doesn't matter how much you make. All right. You could be doing $200,000 a year in income, but if you can't manage your cash flow properly, you're never going to be able to maintain your lifestyle and maintain your business unless you're working at that volume. You're never going to be able to step back. You're never going to be able to take time off. You're never going to be able to spend more time with your family, start a family, get married, take vacations, all of these things, because you set yourself up to rely on this really heavy cash flow, and the cash flow is really going to depend on how much, how often, and how hard you work. So we want to work smarter, not harder. I'm sure you've heard those terms before, but sometimes when it comes to, well, how do we really put this into reality? How do we really put this into play? It can get a little bit tricky, and managing your cash flow is the very first. So what do I mean when I say manage your cash flow? What am I talking about? Am I talking about creating a budget? Am I talking about cutting back on expenses? Managing your cash flow comes with a couple of different layers to it. But the very first thing is making sure that your business is set up to run like a business. And that means having a separate bank account for your business and a separate bank account for your personal expenses. Okay? You want to make sure that those two are very separate. Not only for the legality of things and when it comes time to doing your taxes and stuff like that, but it helps you to be able to separate where the money is flowing and how it's being allocated between your personal expenses and what you need to live your life and your business expenses. The money that you need to be able to maintain your business and the money that you need to be able to grow your business. One of the first things that people say when they're talking to me about my courses or they're talking to me about one-on-one coaching is, I'm going to have to check with my partner and see if we can afford that. Or let me check with my finances. Let me see if I can afford to invest to grow my business right now. If you have proper delegation in your accounts on, this is what I'm paying myself, and this is what I'm using this money for in terms of like my personal bills. Like this goes towards my mortgage and my car payments and my Starbucks and my home goods shopping and whatever. In your personal business, you're never using your personal funds in order to invest in your growth of your business. You're not buying education. You're not buying a new hair class or a makeup class or coaching or templates or anything else that helps you to run your business more effectively and makes you more money in the long run. If you're trying to do that from your personal, that money needs to run your personal life. You need to have a separate account where you can say, this is the amount of money that I have right now to fund the growth of my business. So you need to have that where the money is set aside, and when you look at that balance on that account, you know that every single penny in there is just for maintaining and growing your business. All right. If you're trying to mesh the two, every time you go to Starbucks, you're potentially taking money out of the growth of your business. Okay. So you really need to separate those both mentally and physically. It's a lot easier to separate it mentally if they are separated physically. And also for legality, when it comes time to file your taxes and things like that, having a separate business account, there's no question where those funds came from or where they went. The income and output is so much easier to track that way. So step number one is to understand that you need to have separate bank accounts, separate out your business finances so that that money can be used to grow your business. Not just fund your life, but grow your business. Why are you self-employed? Why are you working for yourself? You could very easily just go work for somebody else and collect a paycheck if all you're worried about is funding your personal life. Collect a paycheck, deposit it in your bank account, and spend it how you want. You're a small business owner, okay? Your long-term business health depends on how well you can maintain your cash flow. Do you have the money to fund your growth, or are you going to remain stagnant? Are you going to remain in feast or famine? Are you ever going to be able to retire? Eventually, at some point, you're not going to want to do this anymore. People don't want to think about that down the road, but it's going to happen, and it may happen faster than you expect. And unless you are in your early 60s and ready to actually retire, and you've actually put enough money away into a retirement account, or you have a really responsible partner or spouse who has been putting that money away for you and having a retirement account, being self-employed, you're not paying Social Security taxes. You're not going to be collecting a Social Security check. You need to have some type of retirement plan, some type of retirement account. Okay, so unless you've been doing that, you've had somebody else doing that for you, or you're with somebody who is wealthy enough to support you for the rest of your life after your 60s, or if you want to stop doing weddings or working in your 50s, whatever it is, something is going to have to fund you later on. You can't physically be out there always doing hair and makeup for weddings. It's not going to happen. You're going to have to transition your career somehow. Every time you want to transition your career and you want to pivot and start something new, guess what? You need money for that. All right. If you want to become an online educator, guess what? That shit ain't free. Okay. Yes, there are some free or low cost options, but it does require an investment of some kind. It requires an investment of some type of technology. All right. You're going to have to pay at some point. You're going to have to pay, an accountant, and you're going to have to pay a lawyer. You want to get things set up for you legally. All right. You're going to have to pay other people to do some of the tech work for you if you can. There's way more tech involved in running an online education company than you would expect. You have to have some way to deliver your courses and your trainings, okay? So every time you want to grow your business or pivot your business in a new direction, you're gonna need money for that. And unless you've been setting it aside specifically for the growth of your business, you're gonna wonder, how am I going to do this? All right, so it's really important to understand, have separate bank accounts. This is what grows my business. This is what funds my expansion, my growth. This is how you scale a business. This is how you grow a team. There are a lot of costs associated with having a team. It's not just you collect the money in and you give them a portion of it. All right. You have other expenses that are associated with that. So no matter how you want to transition and grow your business, you need a business bank account to fund it. All right, so tip number 2, and this comes with like the umbrella of a budget and maintaining control over the output of your money, is pay yourself a salary. This is the first step beyond getting separate bank accounts that helps you get out of feast or famine mode. You need to pay yourself a set salary. That way your income is not dependent on how often you are working. Your income is dependent on maintaining certain account balances within your business. All right. So there are going to be times when you have months of excess. That's that feast mode. Okay. You're going to have months of feast or famine, but your income and how much you pay yourself and how you run your business and support the growth of your business, that's not going to run on feast or famine. You're going to manage that output much more effectively. Pay yourself a salary. You know exactly how much you're going to pay yourself each month. You can know how much to have into a savings account so that you can continually pay yourself. And if you have a month where it's a little bit more famine and your income dips a little bit, you have money set aside for a payroll, or you've set your salary low enough that you can pay yourself and survive and have a bunch of excess left over to maintain and run the business. And then whatever is left over at the end of the year, that's what you pay yourself with as a bonus. So setting yourself a salary helps you to have a baseline of how much you need to make each month. It helps you make better business decisions. It helps you decide how much work you want to take on so that you are not approaching burnout. It helps you build up an emergency fund within your business. It helps you to manage your expenses. All right. If you have a set amount that you're paying yourself each month and you know that your income is going to dip during the month of July or August because there's not as many weddings, guess what? You're not going to go on a shopping spree in July or August. All right. You're going to manage the output of your money based on, well, this is what I have to pay myself. Okay. And you're also going to make better decisions about the things that you spend your money on. Okay. You're not just going to go out there and suddenly decide, all right, you know what? This is this brand new curling iron that this person online was talking about. I'm going to go out that and expect that suddenly my hairstyles are going to look much better. Or Sephora is having this big sale. I'm going to go blow $300 or $400 because I just took in a really nice contract. I just got a nice contract. I got a great retainer. I'm going to go and I'm going to blow that money on things for my kit. And I'm going to tell myself, well, it's a business expense. It's a business write-off, whatever. You're going to make better buying decisions about how you manage your finances when you have a set amount that has to go out every single month. There's a threshold. All right. So it helps you to get out of feast or famine. It maintains your income. And then also at home, if you're paying yourself a set salary, you know what your paycheck is going to be like every week, every other week, once a month. If you decide to pay yourself once a month, you can make better decisions in your personal finances, and you can allocate certain amounts towards things like debt reduction. You can know whether or not you can afford a vacation or a nicer car, those kinds of things. Also, paying yourself a salary you're going to be able to have on paper. Here is my regular payments that I've made, so that if, God forbid, you have to close down your business for a while like we all did during COVID, you have on paper how much you're making. Okay, so you can potentially get unemployment, or you can get grants or loans or things like that, and you have the paperwork saying, hey, here's my regularly recurring payments that I pay myself as a salary. And you've set yourself up to have enough to cover those emergencies. So it's really important to make sure that you are managing how you are putting the money back out there when it comes to making purchasing decisions and making sure that your personal life is always well funded, even in times of famine when your business is not making as much money. So as you can see, when you are managing your income and your output and you're separating your finances, you are making better buying decisions about how you're investing your money for the growth of your business. You're paying yourself a consistent salary. You have so much more control over the money that's sitting around in your bank account. So what ends up happening is by the end of the year, you know exactly how much money is coming in because you have all of these contracts, so you know what the balances are going to be, all right? You are able to maintain a consistent output with your salary. You know exactly how much you're going to pay yourself. Some months you're gonna pay yourself and you have extra money sitting there, and some months you are going to have less money coming in, but instead of having to dip into an emergency fund that you have set aside, you're just maybe not going to purchase as much that month. This may be kind of how you're already running your business, but if you structure your bank accounts the way that I kind of educate inside of my masterclass or inside of my mini course, what really happens is you start to build up a lot more money, because we're going to take all of the money that comes in and we're going to segment it out, and you're basically going to put together like this little emergency fund, or what I call the profit account. And how that ends up benefiting you is by paying yourself a set salary and not paying yourself per wedding worked or per services, and just paying yourself like more in some months and less in other months to maintain things. You're setting aside all this extra money each month and you're putting it into the profit account. And at the end of the year, you can use that in multiple different ways to grow your business. Okay, so the most common one that I educate people to do is to just give yourself a nice year-end bonus. You take what's left